you feel like you're falling behind. Not because you're lazy, not because you're bad with money, but because the entire system is built to keep you chasing. You work hard, you save what you can, and yet, every year, it gets harder to keep up. Gas is more expensive. Groceries cost more. Rent feels impossible. Wages don't move fast enough to catch up, and no one ever told you why. They just said work harder, stay in school, get a job, save money, buy a house, retire at 65. But when you look around, that path doesn't work anymore. Home prices have doubled, sometimes tripled in just a decade. Meanwhile, your paycheck, it crawls. Debt is everywhere. Credit card bills, student loans, auto loans, mortgages. You borrow just to survive. And while you're drowning in payments, someone else is buying their third property, flying first class, investing in businesses, living off assets. So what's going on? The truth is simple. The system was never designed to make you rich. It was designed to keep you productive. You are the engine. You are the labor. You are the income stream. But wealth? That's reserved for the players who understand how the game works. And make no mistake, this is a game. One with rules, one with cycles, one that punishes ignorance and rewards information. If you don't learn how it works, you become the product. The borrower, the renter, the taxpayer, the one who funds the lifestyles of people you'll never meet. This video is not about complaining, it's about decoding. Once you understand how the system works, you stop being the pawn. You start making moves like the people who built it. Not through magic, not through luck, but through strategy. You can't fix the system, but you can stop being crushed by it. And that starts now. Most people think politicians run the world. They don't. They're just actors on the stage. The real script is written by money, and the people who control it keep watching. Presidents change, policies shift, flags wave, but the same families stay rich. No matter who's in power, their wealth grows. No matter which party wins, their assets are untouched. Why? Because they don't depend on governments. They fund them. They influence laws. They bankroll elections. The people at the top don't argue over politics. They control both sides. Behind every central bank is a small group of private interests. Behind every loan is a stream of interest payments flowing upward. Behind every economic crisis is an opportunity if you're holding the right assets. The illusion is choice. The reality is control. You're told to vote harder, march louder, but the real moves happen in boardrooms, in private meetings, at financial institutions. This isn't a conspiracy. It's structure. It's ownership. It's leverage. You think your country is independent, but it owes billions to bondholders. Trillions, in some cases. Who owns that debt? Not citizens. Not you. Pension funds. Private banks. Foreign governments. Multinational firms. You think your president calls the shots, but every major economic policy has to please the creditors. Because debt is power. The one who lends sets the rules. The one who borrows obeys. And guess what? You're the one who pays back. Through taxes. Through inflation. Through decades of work. Meanwhile, the lenders get richer. And your future gets more expensive. So don't be distracted by the headlines. Focus on the flows. Where the money comes from. Where it goes. Who it enriches. You're not powerless. But you're not in charge either. Not yet. Because to change your life, you have to stop playing by the rules they gave you. And start watching the rules they follow. The question isn't who's president. The question is who profits. No matter who wins. That's the real seat of power. And it's not on the ballot. Follow the money. And the whole game starts to make sense. Debt is not just a number. It's a weapon. It looks like opportunity, but it's a tool of control. When you borrow, you promise your future in exchange for survival. Today, you give up time. You give up freedom. You give up ownership. And someone else collects the payments. Student loans, auto loans, credit cards, mortgages. It doesn't matter which one. They all flow in the same direction. Up, to banks, to funds, to the few who hold the contracts. You think you're buying a home, but really, you're renting money. You think you're driving your own car, but really, you're chained to monthly payments. You think you're living free, but most of your paycheck is already spoken for. Debt keeps you running, keeps you working, keeps you obedient. Because when you owe, you can't walk away. You can't quit. You can't say no. You need the paycheck to make the payment. And that's the trap. They inflate the price of everything. So you have to borrow. Then they collect interest on the money they created from thin air. The cost of living goes up, but your power goes down. And it's not an accident, it's by design, because the real money isn't made from working, it's made from lending. And the more people are in debt, the more passive income the lenders receive. Every day you go to work to pay down debt, someone else is making money doing nothing. That's the system. You're working, they're collecting, and they will never want that to stop. So the question is simple. Are you the one paying interest, or the one receiving it? Until you flip that equation, you're playing the wrong role. The goal isn't to escape work. It's to stop working for debt and start working for ownership. Because the moment you own something that pays you, you start stepping out of the trap and into real freedom. The rich don't chase money. They collect assets, real assets, not flashy cars or designer clothes, but things that grow in value while they sleep. 4 things matter most to them: land, property, labor, time. Land gives control. Housing generates rent. Labor produces income streams. Time multiplies all of it. These are the foundations of wealth, and they're not handed out. They're taken slowly during every cycle. When the economy booms, the rich buy assets. When it crashes, they buy more. When prices are low, they accumulate. When prices are high, they collect returns. Everyone else? They buy liabilities. New phones, new cars, bigger apartments. Things that lose value. Things that eat income. Things that don't produce cash. And then they wonder why it's so hard to get ahead. The game isn't about saving more. It's about owning better. Imagine 2 people. Both earn $60,000 a year. One uses it to pay rent, car payments, and credit cards. The other uses it to buy a small duplex and rent half of it out. After 5 years, one still has expenses. The other has income. That's the difference. It's not about income, it's about direction, where your money goes, what it builds. Assets are slow at first, they don't feel exciting, but they compound, and that's where the shift begins. The rich don't trade time for money, they use money to buy time, because time is the rarest asset, and once you own it, everything changes. The sooner you stop chasing income and start buying assets, the faster you escape the treadmill, because you can't outrun inflation, but you can outposition it. The economy doesn't move in a straight line. It moves in cycles, up, down, then up again. If you don't see the pattern, you get caught in the chaos. But if you do, you can predict the moves and position yourself ahead of time. There are 4 key phases in every economic cycle. Recovery, boom, peak, collapse. Recovery starts quietly. After a recession, interest rates are low, the government pumps money into the system. Businesses reopen, consumers start spending again. But the media still talks about fear, unemployment, caution. This is when smart money starts buying, because assets are cheap and confidence is low. Then comes the boom. The headlines turn positive. Stock markets rise. Real estate climbs. Credit becomes easy. Everyone feels rich. People borrow more, spend more, speculate more. This is when most people jump in, because it feels safe. But it's also the most dangerous time. Prices are inflated. Expectations are unrealistic, and risk is everywhere. Next is the peak. Growth slows, debt piles up, central banks raise interest rates to cool inflation, suddenly credit tightens, payments increase, defaults begin. The news still sounds optimistic, but cracks are forming. Finally, the collapse. Markets fall, businesses close, jobs disappear, asset prices drop. Everyone panics. People sell at a loss, blame the economy, and vow never to invest again. But while the crowd retreats, smart money starts buying again. The cycle resets, and it happens over and over. 2000 dot-com crash, 2008 housing collapse, 2020 pandemic dip. The patterns are clear. The question is, do you recognize them? Because your success depends on more than hard work. It depends on timing, not gambling. Just understanding where we are in the cycle, and making moves based on reality, not emotion. If you follow the news, you'll always be late. If you follow the money, you'll see what's coming. Learn the cycle, track it, use it. That's how you stop reacting and start controlling your financial path. The boom feels good. Everyone's winning. Stocks are up. Home values are rising. New businesses are everywhere. Media calls it the golden age, and people believe it. They pour money into anything that moves. Crypto, tech stocks, real estate flips, startups with no profit. The fear of missing out takes over. Friends brag about quick gains. Strangers offer investing advice. Social media is filled with success stories. But behind the curtain, the smart money is preparing. They know the cycle. They've seen this before. They start reducing risk, selling overpriced assets, locking in gains. They don't make noise. They don't post online. They just move quietly. While the crowd rushes in, they're stepping back because they understand one thing. Booms always lead to busts. When prices rise too fast, they disconnect from value. And when the correction comes, it's fast. It's brutal. It's emotional. But it's not a surprise. It's the plan. Those with information exit early. Those with emotion hold too long. They ride the wave up and get crushed on the way down. That's the trap, the illusion of endless growth. But real investors don't chase hype. They track value. They study signals. They know when to go in and when to get out. If it feels too easy, too safe, too certain, it's probably the top. And when everyone around you says this time is different, it's not. It's just another boom setting up the next collapse. The game rewards patience, discipline, awareness, not excitement. When the party's loudest, it's often time to head for the exit. When the crash hits, everything changes. Optimism disappears. Confidence breaks. The market drops fast. Panic spreads faster. Investors try to sell before prices fall further, but there's no one left to buy. Liquidity vanishes. Assets lose value overnight. Businesses lay off workers. Defaults rise. Credit dries up. Everyone wants safety. No one wants risk. And that's when the real money is made. Not by chasing, but by waiting. Smart investors step in. They buy assets at a discount. They buy when others are scared, not because they're fearless, but because they prepared. They kept cash on the side. They understood the cycle. They didn't overextend during the boom. Now they're rewarded. They pick up property at half the price. They buy stocks when they're undervalued. They take positions in companies that survive. Meanwhile, most people are selling, liquidating 401 KS, letting go of rental properties, abandoning the market because it hurts, and fear clouds judgment. But crashes are temporary. The economy recovers. It always does. And those who bought low see massive gains. That's the pattern. Boom, bust, build, repeat. The ones who profit are never the loudest. They're just the most prepared. And while the crowd is licking its wounds, they're planting seeds for the next boom. The question is, when the next crash comes, will you panic? Or will you be ready to buy? That choice decides your future. Not your income, not your job, not your luck, just your preparation. The stock market is not built for you. It looks fair, it looks open, but it's rigged in plain sight. The rules favor institutions. Big players move billions without warning. They have faster data, private meetings, inside access. Retail investors, they get the news late. They buy at the top, sell at the bottom, and wonder what went wrong. Look at IPOs. Most retail investors can't get in early. By the time the stock hits the public market, the insiders already made their profits. You're the exit. You're the liquidity. You're the one holding the bag when the hype fades. Banks know this. They create products to extract fees. Mutual funds, ETFs, options, structured notes. They look helpful, but they often bleed your gains with hidden costs. Margin accounts offer leverage, but they amplify your losses, especially when markets turn, and they always turn. Wall Street wins in both directions. In a bull market, they take fees on volume. In a bear market, they short, hedge, or buy back cheap. You lose. They reload. The game is designed to funnel money from impatience to patience, from emotion to strategy, from weak hands to strong ones. So if you want to win, stop playing their game on their terms. You don't need to day trade. You don't need to chase every pump. You need to understand cycles, buy value, hold through noise, ignore hype. And most of all, know when you're being played. Because the more you react, the more someone else collects. The passive path is about avoiding the noise. It's about choosing ownership over excitement, strategy over speed. Because in this market, calm beats clever, and boring often beats brilliant. Real estate feels safe. It's physical. It's familiar. And prices keep going up. At least, that's what it looks like. But behind the scenes, it's not just demand. It's inflation. It's credit. It's engineered. Banks love real estate because it creates long-term debt. Mortgages that last decades. Fixed payments that generate interest. And collateral they can seize. Governments love it too. Because rising property values mean higher taxes, more revenue, more control. But what about you? You save for years, you stretch your budget, you buy in, and then you spend 30 years paying it off. If you're lucky, if nothing goes wrong. Meanwhile, investors buy with leverage, with partners, with tax advantages. They rent it out, they refinance, they build portfolios. You buy a house to live in, they buy property to get rich, and the gap grows. Look at cities like Toronto, Vancouver, San Francisco, Miami. Prices have outpaced wages for years. Incomes didn't go up, credit did. And with every cycle, ownership gets harder. The middle class gets squeezed. Renters fall further behind. Home ownership becomes a dream again. And the rich, they keep buying. Because they know it's not just about shelter, it's about power, it's about equity, it's about using inflation to your advantage. If you own real estate, rising prices help you. If you rent, they hurt you. That's the split. You're either paying interest and rent or collecting them. That doesn't mean buying blindly, it means understanding the cycle, positioning smart, and never confusing a home with an investment. One gives you comfort, the other builds your future. Working hard used to be enough. Not anymore. You can put in 50 hours a week, save diligently, do everything right, and still fall behind, because wages aren't keeping up, but asset prices are. Houses cost more, food costs more, healthcare costs more. Everything rises except your paycheck. Inflation eats your savings, taxes eat your income, and debt eats your time. The system isn't broken, it's working exactly as intended, to keep you working, to keep you spending, to keep you borrowing. Think about it, in the 1980s, one income could buy a house and support a family. Now, two incomes can barely afford rent. College used to be cheap, now it requires decades of repayment. The cost of living has exploded, but the value of your labor has shrunk. Why? Because labor is taxed, assets are not. You trade time for money. The rich trade money for time. That's the difference. You work for a paycheck. They make money while sleeping. Not because they're smarter, but because they own things that grow, stocks, property, businesses. You can't save your way to freedom anymore. You have to invest. You have to own. You have to make your money work because your job can't keep up. It's not about quitting. It's about shifting from earner to owner, from consumer to investor. Because the harder you work without leverage, the deeper you stay stuck. And freedom doesn't come from more hours. It comes from better decisions. Inflation is the quiet thief. It doesn't take your money. It takes your purchasing power. One year, your dollar buys a full cart of groceries. The next year, it buys less. And the year after that, even less. You don't notice it right away, because the number stays the same, but the value erodes. That's inflation. And it's not random, it's created. When governments print money, when central banks lower rates, when credit flows freely, it fuels spending, which pushes prices, which punishes savers. If your money is in cash, it's losing value. If your income doesn't rise with inflation, you're falling behind. But the rich, they love inflation because they don't hold cash, they hold assets. And when prices rise, so does the value of what they own. Rent goes up, their real estate pays more, goods become expensive, their businesses make more, stock prices rise, their portfolios grow. Inflation rewards ownership and punishes labor. It's a transfer from those who earn to those who own. That's the real game. And you're either on one side of it or the other. You can't stop inflation, but you can use it by holding things that grow with it. Assets that rise, cash flow that adjusts, wealth that compounds. Inflation is not your enemy. Being unprepared is, because every year you wait to act, the cost of doing nothing increases, and the dollar you save today buys less tomorrow. No one teaches you how money works. Not in school, not at work, not even at home. You're taught how to earn, how to spend, maybe how to save, but not how to grow wealth, not how to invest, not how to use debt, not how to read a market. You're told to get a job, pay your bills, stay out of trouble, and maybe one day retire. But that model is outdated. It was built for a world that no longer exists. A world where pensions were common, where housing was affordable, where inflation was low. That world is gone. And pretending it still exists is financial suicide. Meanwhile, wealthy families teach their kids different lessons. They learn about taxes, leverage, cash flow. business structure. They learn that money is a tool, not just a reward, and they use it accordingly. You don't need to be born rich to learn these things. You just need to be curious, willing to challenge what you've been told, willing to look beyond the basics, willing to learn what actually works. Financial education is your greatest asset. Not a degree, not a title, not a promotion, but knowledge about how money moves, how it grows, how it's protected, and how it's multiplied. You can start small: a book, a podcast, an investment account. The key is to begin, because the sooner you understand how the system works, the sooner you stop being its victim and start using it to your advantage. You trade time, they trade assets. You show up for work, they make a phone call. You earn by the hour, they earn while sleeping. That's the divide. Labor versus ownership. You're taxed before you even touch your paycheck. They borrow against appreciating assets and pay nothing. You clock in, they collect. It's not about effort, it's about structure. And the structure is tilted toward those who understand leverage, who know how to use money to create more money. You save $10,000. They use $10,000 to borrow $100. You wait for a raise. They refinance and reinvest. You pay interest. They earn it. You worry about making ends meet. They worry about maximizing yield. That's the new economy. And it's not about fairness, it's about understanding the rules. You don't have to stay stuck. You can move to the other side. But you have to shift your mindset from earning to owning, from spending to investing, from consuming to building. Every dollar you save can become a worker. Every asset you buy can become a stream. You don't need to be a millionaire to start. You just need to stop acting like labor is your only path. Because ownership changes everything. It puts you in control, it gives you options, and it lets you earn even when you're not working. That's how the wealthy stay wealthy. They don't work harder, they work smarter, they own, and they let time do the rest. The rich don't need a printing press. They already have one. It's called leverage. They borrow against their assets, without selling, without triggering taxes, without losing control. A billionaire doesn't sell stock to buy a house. They borrow against their stock at low interest, then write off the interest and keep the gains. That's how wealth multiplies. They don't liquidate, they collateralize. It's legal, it's smart, and it's only possible if you own appreciating assets. This is how they live tax-free, because borrowed money isn't income, it's not taxed. And while their assets grow, they spend borrowed cash. Then they pass the assets to the next generation, with special tax rules. It's not a loophole, it's the playbook, used by CEOs, founders, investors, anyone with large equity positions. Even your primary home can work the same way. Build equity, borrow against it, use the funds to invest, multiply wealth without selling. That's how money prints itself. And the banks, they're happy to lend, because your assets secure the loan. It's low risk for them, and high power for you. But it only works if you start owning, if you build equity, if you shift from spending to stacking, from saving cash to buying cash flow. That's the step most never take. They stay liquid, they stay taxed, they stay working. But the wealthy, they build balance sheets, then turn them into income. Silently, legally, and continuously. That's the real money printer. And anyone can learn how to use it. Now you see the game for what it is. Not broken, not unfair, just hidden. And now that you understand it, you don't have to play the old way anymore. You don't have to trade time for survival. You don't have to chase trends or live paycheck to paycheck. You can build, you can own, you can move quietly and win loudly, step by step, one smart decision at a time. That's what we're about here on The Passive Path, helping you make sense of money, cycles, assets, and freedom. If this video helped you see things differently, like it. If you want more real talk about wealth and how to build it, subscribe, drop a comment, and share your story. And if someone you care about is still stuck in the grind, send them this video. Give them a shot at understanding what's really happening. Good luck on your path. Check out the other videos on the channel when you're ready. See you in the next one.